Today I'm going to tell you about offshore banking and answer one question that we often get from our audience and clients: is offshore banking legal? Hi, my name is Rusudan. I'm a Chief Financial Officer here at Nomad Capitalist, where we work with ultra-high net worth individuals to help them optimize their tax, get second citizenships, and go where you're treated best. The short answer is that yes, offshore banking is legal, but when done by the book. So what we mean here is that sometimes you have some paperwork and regulations that you have to follow and comply with to make sure that whatever you're doing with your offshore banking is correct and within the legal framework, and then you are not missing any kind of regulations that you have to follow. And that often means that there's no extra tax to pay or anything, but you just have to still comply with that. And if you don't, then you may face some penalties in that case. So first I'm going to start this video with the definition of what is offshore banking. So if you're live in a country and you have a bank account in other country, it means that you have offshore bank account. So if you're in the US and you have a non-US bank account, you are banking offshore. Congrats. If you are in Australia and you also hold a non-Australian account, you are also banking offshore. So with that out of the way, we can now dive into more details about offshore banking. As I said, it is legal to bank offshore, but there are certain regulations. So some people have the misconception about offshore banking, thinking that you have a separate bank account somewhere outside of the country and you can kind of keep it hidden, which is not correct. Because in most countries, there are certain regulations where you have to disclose information about your bank accounts held in other jurisdictions. For example, if you're in the US, you have to file FBAR. FBAR stands for Report of Foreign Banks and Financial Accounts. You need to file FBAR if you are a signatory on an account outside of the US, or if you own an account outside of the US, and those accounts in aggregate value exceeded $10,000 at any moment during the calendar year. The definition of what goes on in FBAR is rather long, and you definitely need to check in detail what goes there, but we can briefly go over a couple of things that you have to pay attention to. So all your brokerage accounts, investment accounts, checking and saving accounts go there. You also have to disclose information about any income. For example, even though like real estate information doesn't go there, but the income that derives from your real estate held outside of the US, you have to report that. Some other considerations are stock ownerships, foreign stock ownerships, you have to report that. For some countries, you have to report LLC ownerships, because for some countries, LLC definition is the same as what you guys have in the US called corporation. So basically, the name may be different, but the definition is the same. So you have to report any ownership in that in LLCs as well. One interesting nuance is also, for example, precious metals. You don't have to report precious metals, but if you are holding them in a bank account under your under a sub account with your other bank accounts, then you need to report that, because basically it's held with the bank. So there are lots of nuances here, so it's important to pay attention and be compliant with that. In addition to FBAR, we also have to talk about FATCA. So FATCA is a report that financial institutions file. So basically, if you have an account with some countries that have agreements with the US to disclose information about any account they hold that are connected to the US people, it means that they will disclose information about your bank account. So that's why when you are signing on with offshore banks, they ask you to disclose any information of the connection to the US, and you have to sign additional forms for KYC. So similar to the US, some other countries have different forms and reports and organizations that make sure that the banking information is disclosed as needed. And one example of that is the Organization for Economic Cooperation and Development that has implemented the Common Reporting Standards. So CRS is the equivalent of what we said about FBAR and FATCA in the US. So CRS makes sure that the countries share information received from the financial institutions to make sure that all the tax authorities in respective countries have the information about bank accounts held outside of their jurisdiction. So basically this means that just having an offshore bank account doesn't mean that it's separate. It means that some countries are sharing information, so you have to always know what that means for you personally and for your business. Now let's talk about the advantages of having an offshore bank account. The first thing that we always advise our clients is that by having an offshore bank account, you are more diversified, and you diversify on two levels. The first is that you diversify by by working with different banks, and the second, you diversify by working with different jurisdictions. So basically, if one bank fails, you're not really dependent on that one, and if there is some issue in some country, like economic situation or political or something else, you are also reducing your risk by not being dependent on just one country. One other advantage is that you can get more security. For example, in the US, you have FDIC coverage of $250,000. So any account per person, per bank, and per account is covered by that amount. But if you have more money, you want to make sure that that is also covered. So if you move it to your offshore bank account, you can enjoy the same kind of insurance from other governments. For example, Portugal also has the similar practice where the government insures 100,000 euros. So basically, if you have an account with the Portugal banks, that amount will be covered by their insurance. So you can structure your banks and your funds accordingly and be more safe to make sure that nothing is going to happen to your money, and even if anything happens, you get that back. A couple of other advantages are that you can be more flexible with foreign currencies, you can get higher interest rates and sometimes hedge against the currency fluctuations. If you're traveling a lot, you also get the benefit of having the needed currency, and you don't have to convert all the time. And it can give you flexibility with the payments and just user friendliness that some countries don't always have. So you have more choices. One other thing that I think is a very big advantage for offshore banking is that, for example, some countries have different legal framework for banking. For example, in Switzerland, the banks are not allowed to share information that they hold a bank account under some person's name. I'm not even saying that they cannot share anything about the account itself. They cannot even confirm if the account is there. So I think that it gives you a very good privacy that may not always be available in your home country or in some other jurisdictions. So that's always good to consider. And if that's important to you, you can research more about that and find out the jurisdiction that provide that kind of privacy. In some cases, we've seen that offshore banking is used in tax optimization. And here I must say that, yes, you can do that, but you have to always know that you're not paying tax on your bank account, you are paying tax on the source of income. So just holding some money in the offshore doesn't mean that you don't have to pay tax about that, so be careful. With offshore banking and some myths and misconceptions that we often hear about that, I must also separately mention and answer one other question that we often get: is offshore banking safe? And what I can say here that yes, it is safe, but you have to do your due diligence about the banks that you're choosing. There are certain jurisdictions that are very reputable and very safe, like Switzerland, Singapore, Hong Kong, European banks. They have good foothold and they are very safe. And for the other jurisdictions, also the Cayman Islands, a good opportunity and maybe a bit expensive, but still good. Because offshore banking may be new to some of you, I will also mention what kind of steps to take to make sure that you are not unintentionally committing any fraud or not being compliant. So first thing is you have to be very diligent about your choice. You have to review and research the banks and jurisdictions. You have to see what kind of regulations the banks have there, what kind of guarantees they have. And as we know, banks always have like lots of things in their fine print, so I would definitely advise to read that, or at the very least get more details about certain items, such as their security, what kind of guarantees they are giving you, interest rates, fees, maintenance, etc. So those are the things that I would pay attention. In addition to that, I would also make sure to get the tax advice from some professional to make sure that I know what that means for my personal tax, like holding a bank account. Do I have to disclose that? Do I have to pay any tax? Or is it just something that I can keep for me and nobody really cares, which, to be honest, never is the case. In addition, I would also be very diligent about making sure that I'm getting the banking product that I need, because in some countries, banks are more like wealth management, and you cannot really use that for transactional purposes. And in some countries, you have like fintechs, upcoming like smaller banks, but they are more user friendly. So those are like all very good opportunities. But if you want those kind of products, like if you want your wealth managed, then yes, that's what you want. But if you want to use that for more like business transactional and day-to-day operations, then the wealth management bank is not really something for you, and you have to be very clear that the bank service is what you need. Generally, I would really seek a professional advice when choosing any kind of banking option, especially in the country that you're not familiar with, and especially if you also already have some kind of offshore structure and you have a personal and business structure that you have to take into consideration. I think that sometimes with like fast and hasty decisions, we do not pay enough attention to some consequences of our choices. So I think that tax and overall compliance to legal framework is important in this case. If you want to get more information about offshore banking, we do hold annual event, Nomad Capitalist Live, and you can always join our waiting list and be more informed about second citizenships, offshore banking options, tax optimization, second citizenships, and a lot more.